The Nifty started the week in the green, advancing for the second straight session. In fact, it closed above the 24,200 levels, and that rally was primarily led by ONGC and BEL, both Nifty mid-cap and small-cap, to advance for the second straight session. Meanwhile, Nifty PSU Bank was the top sectoral gainer. It registered the biggest single session gain in over 5 months. It surpassed the 20 and 50 DMA levels as well. So let's focus on that a bit, on the PSU index, with shares of these public sector undertaking companies, including banks, rallying in trade today. What led to that, and can the rally be sustained? I'm now joined by Sudip Bandyopadhyay, Group Chairman, Indie Trade Capital. Thank you very much, Mr. Bandyopadhyay, for speaking with us at ET. Now, let me first ask you, we'll come to the PSU index in just a short while from now, but let me first ask you about last week's moves. It seemed like the resounding comeback of the Mahayuti has actually led to a pretty strong rally for the markets as well, basis expectations that they will be spending on infrastructure following policy continuity. So what is it that you're anticipating on market positioning?
Well, you're absolutely right. I think the expectation is that the coming back of the Mahayuti alliance will fuel further infrastructure spend, and that definitely got the entire infrastructure and related sector companies excited. Overall, the market sentiment also has been extremely positive post the return of Mahayuti to power. Maharashtra is a very important state. It has a significant contribution to the overall GDP and tax collections of the country. So this is definitely a good news for the market point of view. And that's what pretty much happened. As far as the overall scenario is concerned, we believe that the market definitely is in a positive territory. Global markets also have been supportive as far as today's market scenario is concerned. And we definitely believe that the momentum towards the positive side will continue for some more time.
Right, Mr. Bandyopadhyay, but speaking specifically of the PSU space, and correct me if I'm wrong, a rally of 13% being seen. Many are now saying that this could very well make a stronger comeback, and even a stronger comeback in the near future. What are the levels that you're anticipating for this particular space?
Well, I think, PSU is a huge segment. So if I have to demarcate, I would say that let's look at the banks. Overall, PSU banks were not attracting too much of attention in the market, and they were kind of languishing. Particularly if you look at mid-cap PSU banks, I think there is some excitement back. Even a bank like Bank of Baroda is quoting less than book value. It is 0.9x of book. So I think there is significant opportunity for value appreciation as far as PSU banking space is concerned. And if you look at some of these banks, they don't have too much of exposure in the unsecured credit space, and they also don't have too much of exposure on the credit card, unsecured credit card space. So I think the concern around overall banking space should not, affect these PSU banks. A, because their exposure to unsecured lending is limited. B, because they were already quoting at a significantly, attractive valuation. Now, apart from banks, if you look at the other PSUs, I think, the defense PSUs, rail PSUs, they are excited. They have been, moving up. But I would say that, the valuation wise, I mean, everything else is absolutely perfect. But the valuation, to my mind, is still little, full. And I would recommend investors wait and watch. There is no need to, rush into these stocks. There is absolutely nothing wrong with the stocks, but the valuation is probably still rich.
Right, so the valuations are rich, so that's one concern that you flagged off, Mr. Bandyopadhyay. But when you speak of these sectors, particular sectors in the PSU, space, PSU banks, defense and railways, what are the other concerns that you have, and what would you like to tell investors?
Well, as far as defense, since you mentioned specifically, Sumita, I do like the defense space, and there are good companies in the defense space. BEL, Bharat Electronics Limited, I think is a fantastic company. And if you are an aggressive investor with a long-term horizon, I think there is no problem in buying BEL even now. Defense electronics is a space which I think will go a long way, and the order book of the company is full. The performance has been consistently good. So Bharat Electronics, even at this valuation, I'm fine. The other company which I strongly believe in is Container Corporation. I think, again, it's a fantastic company. And with the increase in import, export, and trade within the country as well, I think the scope for Container Corporation, Concor, is gradually expanding significantly. Somehow it is stuck in a range. And I strongly believe that at some point of time, this will break out of this range. So from an investor's point of view, I think, again, this is a good buy. Other pockets on the PSU basket, I think I forgot to mention earlier, is the power sector. I think there is a structural positive in the power sector, and the structural change is going to has impacted pretty much all the power-related companies. And I believe this is a secular move, and this will continue in the foreseeable future. So, whether the power producers like an NTPC, I think, continues to look good. Some of the power equipment manufacturers, including BHEL, performance of BHEL was not good in spite of having a strong order book. But last quarter, they turned it around and the performance was much better than what the market was expecting. So even BHEL at current level can be looked at from a long-term investor's point of view. So the same thing applies for NTPC as well.
All right, Mr. Bandyopadhyay, some interesting names that you've taken over there. But when one talks about the kind of rally that this segment is going to experience, given the kind of capex, push, those anticipations coming up, what is the kind of rally that you are penciling in, particularly for this space and, of course, these current themes? And do help us understand the future triggers and market impact as well.
Well, a couple of things I would mention as far as overall market is concerned. The next trigger should come from interest rate movement. RBI probably will have to cut interest rates, if not in December, in February. That should help overall the market scenario and market investments. The second, I think, of course, we have seen what's happening in US. There is a lot of expectation around the new administration and the multiple policy announcements which is coming from the incoming administration. There is a distinct advantage which India will get in terms of the export business, because they are talking about a significantly higher tariff in China vis-a-vis other countries, including India. Now, if and when this becomes a reality, Indian exporters will have a significant leg up, and somebody who is planning to be in US or do business with US will definitely get enthused. So we need to look at these sectors and these segments very, very clearly and very, very differently. So you can start taking position in these segments clearly. Other segment, which again, nothing to do with the US or anything else, is our internal consumption. I think the FMCG segment suffered because originally the demand in rural market was subdued. Then when rural demand picked up, the urban demand was subdued. But I strongly believe in a country with 140 crore population, and the way the festive season has shaped up and the way Q4 generally is, FMCG demand will come back. And with that, FMCG performance also will start improving.
All right. So wonderful notes, Mr. Bandyopadhyay. So you are betting big on internal consumption, India's domestic story, growth story being robust, and of course penciling in that rate cut that could happen in the near future from RBI, and of course US policy announcements that could perhaps give a distinct advantage to India. On that note, thank you very much, sir, for joining us right here on ET Now and giving your perspectives on market breadth and of course the kind of rally that we'll see.
If you like this video, then like, share and subscribe to ET Now.